Let's bring up our longtime friend, JJ Kinahan, CEO of IG North America. JJ, good to see you.
Always
it's been
a pleasure,
a while. Always
Brian.
appreciate your support here.
Got the gray suit memo?
Yes, we did. That is all that. Very good thing. Hashtag twinning, and I should say hashtag Yahoo Finance Invest. Look, JJ, we just heard what Miles was talking about, the Fed. Really, the Fed has, I think, made a decision to potentially stay higher for longer with interest rates. As someone actively in this market, what does that mean to investors out there?
Well, I think the biggest thing for investors is the Fed may not raise rates because the market's done the job for them. But I think if you look back 9 months, Brian, you were reporting every day. People were talking about the Fed. Okay, we'll have these rate cuts. We'll have these rate cuts. I think to plan on that is silly. So what does that mean for people who are trading every day, who are managing their portfolios? Plan on looking at this. I think we're going to be stable for a while. I don't necessarily think that we're going to see rates go much higher. But on the other hand, being higher for longer can also mean steadiness. And actually, at the end of the day, I think that's what you're seeing in this rally we've seen over the last week and a half or so, is the market is happy that for a while, perhaps, you can invest with a little more confidence. I think one of the things that the market lacked was real conviction, because you're like, oh my God, what's the Fed going to do? So if the Fed can keep us in an area where people can invest with conviction, longer term, that's what's actually really good.
So do you think these gains are going to last? And I guess, what does that upside then look like?
Well, I think we're going to last. I don't think we're going to continue on this great streak up, so to speak. Can we go up another 100 S&P points within the next 6 months? Yes, I believe we can. Do I think we're going to go significantly higher than that? No, but I guess the good side is I don't think we go, significantly lower. I don't think we're going back under the 4,000 level on the S&P 500.
How concerned are you, JJ, that so much wealth in this stock market is tied up in 7 stocks? What is NVIDIA, Microsoft, Apple? What about the other 493 other stocks?
Well, some of them, I think one of the good thing about the last week is some of them finally started to perform. What I'm really excited about right now, Brian, is think about this earnings season. We have had a lot of really positive reports. I know going into this week, and I'm sorry I didn't check the stat, we had almost 80% of the companies beat. And so that stat's normally around 65%. We had a few that didn't quite do as well this week. But that being said, I'm very positive about that. I will say I do worry a bit as we have the retailers coming up, because I think they are in for a little bit tougher slog in the future. But at the end of the day, earnings drive markets. And so with that, when you continue to see good earnings, that will pay off in the long term. And I do think that it's been really nice to see some of the other sectors come out to play, if you will, which we haven't seen in a while. And the last thing I'll add to that is I'm really hopeful for the financials as we start to see perhaps the yield curve normalize, that many people have been so disappointed in the financials. Well, they need a normalized yield curve even with higher rates in order to really benefit from this.
JJ, where are you seeing the opportunity now then? You mentioned the fact that we're starting to see a little bit of a broadening out in terms of the outperformance that we are starting to see within the market. What do retail traders like right now, and what do you like specifically?
Well, I'll start with our clients overall. So not surprisingly, the main stocks are the 7 we just talked about, right? Overall, in terms of things they like. So as they start to go out, what's really been interesting to me is one of the stocks that's gotten a lot of love, and I'm going to use that one as a punter in a second, is Southwest Airlines. And so in some of the
about Southwest Airlines,
I
just talked to Bob Jordan. Yeah.
Oh, okay, there you go. So I think that's, to me, a really interesting stock overall. And I will tell you, the opposite end of that is one of the stocks they have really not liked has been Carnival Cruise Lines. And so what that starts to tell me is people believe that this travel boom will continue. And I think businesses in general are starting to pick it up. We've seen a little bit of love for the Delta Airlines also. But Carnival, we've definitely seen a lot of negative activity on. And so to me, that's been a really big surprise overall, if you will.
JJ, I have 30 seconds left.
Yeah.
A lot of focus at the conference is going to be on what's next for 2024. Big election season, likely more volatile markets. What's your best advice to investors watching on Yahoo Finance?
My best advice to everybody is keep your trades smaller and more often. And the reason I say that is rather than buying 500 shares, maybe 100 shares, let the market move, then another 100, et cetera. I think the big mistake too many retail traders make is they're all or none. In this era of zero commissions, I think that it really pays to let movement be your friend rather than your enemy. And that is one thing I would always advise people to do. And by doing it 5 different times, you also tend to get a better feel of what's going on in the market. It forces you to interact, just like golfing. The more you swing, the better hopefully you are.
So true. Great advice.
Something you can relate to.
Yes, absolutely. Great advice as always. JJ Kinahan, CEO of IG North America. We appreciate your long-time support. Enjoy the conference. It was really good to see you.
Great to be
Appreciate
here.
it.
Thanks,
Thanks
guys.
so much.